Let's start with inflation then in Nigeria. As I said, that inflation figure just out for Kenya this morning. We've got inflation sitting at 10.5% year on year in October for Nigeria. The finance minister has said that there's still room to cut rates and bring inflation back into single digits, while Sanusi, on the other hand, saying that we should expect further tightening in monetary policy going forward. What are your expectations for rates?
Well, as an analyst, I was shocked at the comment of the finance minister in terms of cutting interest rate at this point in time and trying to maintain the single digit. That is in a strong contradiction to what the central bank governor is doing. And I hope that is not a conflict of policy direction. If you ask me, cutting interest rate at this point is clearly not the way to go. It's still a tightening measure. There's still a lot of threat to inflation. All the story about fuel subsidy is still not, has not happened. So if we really look at it, cutting of interest rate at this point in time is clearly not the way to go. I think the CBN is in the right direction and should focus on it.
Yeah, we've also, we know that reserve banks and finance ministries tend to often butt heads in terms of what they should be doing, and bringing that inflation figure down will be based on the fact that they're able to cut fiscal spending. What are your projections in terms of the finance minister and in terms of reining down that expenditure on the fiscal front?
Well, from all indication, recurrent expenditure is still going to be about 72% of the fiscal spending for next year, which is still very high. I would have thought there would be serious restraint, but 72% compared to 74% this year, I think it's just a marginal restraint. And if we really want to look at that, we probably need to cut the recurrent expenditure more and focus on let the CBN focus on its policy tightening on the contractionary monetary policy, as opposed to any quantitative easing at this point in time. And I think if you ask me of my outlook, I think that will continue at least in Q1. We're still awaiting the monetary policy circular for 2012. Until we get that and look at the budget figures, we probably will not be able to say much about what the policy direction for 2012 is. But at least in Q1, I still expect to see the contractionary monetary policy, and probably in the MPC in January, we may still see some hike in interest rate. I don't think the hike cycle is over yet.
And at the same time, we start a new week with the Naira being devalued by the CBN. And of course, the demand for Forex continues at those auctions. At the auction yesterday, you had $315 million demanded and only $200 million applied. And of course, this continues to put further pressure on the foreign exchange rate.
Well, month to date, we've seen the central bank devaluing the currency by 5 naira 2 kobo, which is significant. In the course of the month, they've also moved the policy band rate from 150 to 155. And the current rate, the nominal rate of central bank at the moment is at 157.26, which gives it at an effective of 158.83. And that shows that they are also, the demand on the window has been very high. Month to date, we've seen a demand of about 2.85 billion, and they've only sold 1.56 billion. I think we'll see a deliberate strategy to curtail the reserve, but interestingly, CBN has also been very proactive in intervening in the interbank market. So they've been coming to the interbank market to stabilize the rate, despite the fact that they've not been selling as much in the WDAS window. So it's a give and take thing, if you ask me. To the extent that they've been very proactive in the interbank market, I think they're still displaying the muscle to be able to sustain the rate at current levels.
We saw the interbank rate shooting up to just over 160 yesterday, 160 naira to the dollar, that is. Are we likely to see a further convergence between the official rate and the interbank rate going forward?
Well, we'll see a near convergence, but a total convergence is what I cannot guarantee. And the reaction yesterday at the interbank market is just a normal reaction to the depreciation at the central bank window. That's why we saw the rate going to 160.1, 160.2. I think that's where it closed the day yesterday.